Now, let's bring you updates from the global oil markets where prices are still plummeting and extending Monday's nearly 25% decline on ongoing fears that storage around the world is rapidly filling. International benchmark crude traded 4.3% lower at $19.13 a barrel, and WTI, which is the U.S. benchmark, slipped 19.48% to trade at $10.29 a barrel. The coronavirus pandemic has erased as much as a third of global demand for oil, according to estimates, which has sent prices tumbling to record lows. Prices were also pressured on Monday after the United States Oil Fund, which trades under the ticker USO and is popular with retail investors, said it will see all of its contracts for June delivery beginning on Monday in favor of longer-term contracts. WTI and Brent are both on pace for their fourth straight month of losses for the first time since 2017. And let's take that to the commodities markets now. And the research analyst at the financial derivatives company, Sunmoni, joins us now for that. Good morning, Desola. Well, let's begin with oil prices. Of course, we saw Brent crude trading below $20 per barrel as at this morning, and the external reserves are down to $33.63 billion rather. And at the same time, the naira also remains under pressure, slipping to 455 to the dollar. How are these developments affecting the exchange rates? And give us your outlook.
Okay, thank you for that question, BC. So the oil market has been hit in phases by this coronavirus pandemic. The first phase was the lockdown starting from China, which spread throughout the whole world. Second phase was the storage facilities. The fact that storage facilities were filling up very fast and with no one to take off the oil. For instance, some analysts have estimated that 85% of storage facilities are already that storage facilities are already 85% full, and Goldman Sachs estimates that in 3 to 4 weeks storage facilities would be at capacity. Now, the third phase is that there are a lot of ships laden with oil at sea right now that are just there with no one to buy the oil. So all these factors together point to the fact that we are not going to see oil prices increase anytime soon. Now, add that to the fact that crude oil futures for June and July, the prices are already declining, which just signals that oil traders don't see oil prices increasing anytime. So now add that to the fact that OPEC has agreed, OPEC plus with the United States have agreed to cut output, and Nigeria is going to cut production to 1.4 million barrels per day. Add that to lower oil prices, that just shows that the external reserves is going to remain under pressure for the near term. Now, all these factors put together just point to the fact that our exchange rates will also remain under pressure in the near term. In addition to that, we are seeing also foreign portfolio investors trying to leave the country, so there's huge demand for dollars in Nigeria, and the retail investors in Nigeria are also trying to invest in dollar-denominated assets. So all these factors point to the fact that the exchange rate is going to remain under pressure in the near term, and oil prices also are going to remain low for the near term.
Oh, yesterday, President Buhari announced plans to gradually ease some of the lockdown measures in Lagos, Ogun, and the FCT in order to return some semblance of normalcy after being on lockdown for about 4 weeks. In your view, what are the implications of this decision on economic activity, especially at a time where the number of COVID-19 cases are on the rise?
That's a very, very tough question, BC. Even the president says, the federal government was faced with a very, very tough decision. It was like a trade-off or a fine balance between saving lives and saving livelihoods, or curbing the spread of the coronavirus, as well as curbing the spread of coronavirus against saving the economy from total collapse. And this is a choice or a decision that is faced by governments all around the world, and unfortunately no one knows the answer. No one knows if the president made the right decision or not. Only time will tell. But because the effects across countries are varied. For instance, in Europe, here in Spain and Italy, we are beginning to also see some easing of this lockdown, but this was only after these countries have reached the peak, and then we're now seeing consistent and sustained reductions in the number of deaths and the number of new cases. Also, look at Sweden. Sweden did not lock down strictly like some other countries in Europe did, but their outcomes in terms of hospitalizations and deaths is not worse compared to countries that did lockdown. Now, this bringing this back to Nigeria, it is particularly dire for Nigeria because Nigeria is a hugely informal economy. So a lot of people depend on daily wages. So it has gotten to a point where people are having to choose between dying by COVID-19 or by hunger. And I think the federal government has, said, what, is a huge risk that the federal government took, and only time will tell whether it was the right decision. But yeah, only time will tell whether that was the right decision.
What will these mean for the commodities market space? Do you think that the palliatives of the federal government are sufficient to cushion the effect of higher commodity prices amid job losses?
Like you said, BC, we are seeing commodity prices jump compared to last month. I mean, all the commodities that we cover, apart from cement, all of them are seeing significant increases in their price. For instance, seeing yam, the price of yam jumped by 63%. We've seen price of garri jump 63%. We've seen yam jump 50%. We've seen tomatoes jump 33%. But it's important to note that this also coincides with the planting season, and generally during planting season, our commodities prices increase. But I think that the palliatives have helped. They're positive and they've helped in a way to cushion the effects. But the way they were distributed was not efficient. I know some there were also leakages along the way. So if a household, for instance, was allocated or expected to receive a bag of rice, because of the way it was distributed and because of all the leakages along the line, the house would probably end up with maybe a nylon bag of rice instead of a 50 kg bag of rice. So because of all of that, the effect has not been as strong as would have expected. But I think that the fact that the federal government is going to lift up the lockdown will somewhat help, so that people can at least go out and fend for themselves. But there's also the huge risk, the very very huge risk of contracting the virus and potentially dying from the virus.
Desola, let's talk about the IMF's Executive Board's decision on Nigeria's $3.4 billion emergency funding request. What are your expectations from that?
Well, I'm bullish. I'm bullish that the IMF would approve the rapid financing instrument, which is not a program it's not a program that comes with conditions that have to restructure the economy, and that it is just it's a facility that will be approved quickly, and it comes with little conditions. And so far, the IMF has received about 102 applications for emergency funding, and they've approved 20 in this month of April alone. So I expect that as the executive board considers Nigeria's request today, I expect that they would approve it, and that is good for Nigeria. It is positive in the sense of it's first of all it will help the federal government, to be able to cope with some of the expenditures they have to make during this pandemic, and even after the post-COVID-19 economies, to help investors. It will help also, it will help the federal government. It will also strengthen investors' confidence. So we may begin to see if the instrument is approved, we may see renewed investor confidence, because currently investors are bearish on Nigeria. They're trying to take their money out. But if the instrument is approved, then we may see some renewed risk appetite. We see new foreign portfolio investments coming in, which will increase or help with the external reserves and also with the exchange rate.
In a surprise move last week, Desola, we saw the CBN debit commercial banks about 1.4 trillion naira for CRR violations. Of course, this comes at a time where there is a strong need for bank lending to boost the economy. What are your views on this development?
Like you said, it was the CBN debited because of CRR violations, and we saw interbank rates increase from as low as 2% to as high as 35% the next day. But from yesterday and today, we are seeing some refunds by the central bank, because that really wiped out liquidity from the system, and it's also kind of altered some commercial banks loan to deposit ratio, and also made them averse to lending money. But we've seen some refunds yesterday, and we're also expecting some coupon payments today, some bond coupon payments today. So I think that should, increase some liquidity increase liquidity in the system, crash interbank rates, and also help the commercial banks to now continue to lend money to customers.
Just before you go, Desola, give us an outlook for global commodities, particularly soft commodities and grains.
So for grains, we expect the loss or the dent in demand from the COVID-19 to continue to weigh on prices. So we expect to continue to see prices we expect prices to remain low. And for the softs, for cocoa, we are seeing issues, weather related issues, affecting supply in export countries such as Cote d'Ivoire and Ivory Coast, so Cote d'Ivoire and Ghana. So we expect that to persist in the near term. And for sugar, we expect the prices to remain I expect the prices to also remain low in the near term, because of uh, 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 issues in India with exports. So issues in India with exports. Anyway, the idea is COVID-19 is really affecting commodities market, and I expect the effect to persist in the near term until we see the lockdown ease globally. Then we can now see prices change direction.
Research analyst at the financial derivatives company, Desola Sunmoni, thanks for sharing your thoughts with us this morning.